Let's talk taxes for a bit here, John. One way to plan for them is doing a Roth conversion, where the money is moved from pre-tax accounts like your 401ks and traditional IRAs to an after-tax Roth. The earnings can then be withdrawn tax-free. It seems like we talk about this a lot for working people who might be approaching retirement, John, but what about those that have already retired? Is there a cutoff age for this where it no longer is efficient for them to make these Roth conversions?
Well, I mean, the beauty of, Roth conversions is there's no limitations. There's no time limitations. Even if you're in retirement, you can still do Roth conversions. We have to look at to see if there's a need for a Roth conversion, and if we're converting, what we're converting at, and what positions we're converting at. Like earlier this year, some people took advantage of converting in the little slump through Q1 of the market, so they were able to convert more positions at the same dollar amount of their equities over at that point in time, and then from there they have capital appreciation because the market had ran up since then. So we just have to look at, number one, if it's valid, and then what's the strategy. If you're in retirement and your only source of income is Social Security, I mean, right now you can technically convert roughly about $22,000 a year. That's going to be changing. It's actually going to increase to your from your IRA to your Roth IRA without even paying taxes. Now, we just have to look at how the standard deduction changes over time. And, as laws, change, we just have to work the code. Now, for some individuals that maybe have, let's just say, less than $500 or less than $750,000 in their IRA, we want to make sure that if they're converting, they're not jumping above the 12% federal tax bracket. After that, I believe it's a little too expensive to convert. Now, there's some people that I think they should look at converting maybe to max out the 24% tax rate, because that's historically low. We just have to look at, okay, is that valid? It depends on how much money you have in your traditional IRA. So whenever we see people with a multi-7-figure or even an 8-figure IRA, we want to look at, okay, what is the best thing for them to do? Now, in most cases, most people would say, let's go ahead and max out the 24% tax rate, but maybe let's be pretty cautious about the IRMA rate. So whenever your income threshold jumps beyond certain dollar income values, then your Medicare Part B and Medicare Part D premiums will escalate. But then we have to look at what are some advanced things that we can do. So what happens is, since we help out a lot of business owners lower, reduce, or eliminate their tax liability through strategies that are compliant with the IRS, there is a particular strategy that we can utilize where we can help offset someone's conversion without paying taxes on it. Now, you have to be qualified for doing this. You can't have, $500,000 in your IRA and you want to convert it over without paying taxes. I mean, I know you want to, but can you utilize it in a strategy? No, absolutely not. We need to make sure, number one, you're passing the net worth test. There's a lot of different factors that we have to look into, but ideally we can create an entity, an LLC, and use a depreciation strategy where we can move over up to $626,000 from your IRA if you're married, or $313 if you're single, from your IRA to your Roth account without paying taxes. And so that's the key thing is, we have people that we help out that have $5, $6, $7, $9, $15 million in their IRA. And, the big thing that they're going to be dealing with is a huge tax liability in the future. Number one, for the RMDs, because more than likely they won't need that amount of income. And we've seen that in most cases. We have people coming in where they had a $400,000 RMD, but they only need 60 of it to supplement their social. Okay, so what can you do? So what we have to look at is can we deploy this strategy? Number one, we can do substantial Roth conversions. We can convert up to $626,000 a year in 2025 from their IRA to their Roth without paying taxes. Number one. So the key thing is, if you have your money in a 401k, we can't move it directly to a Roth using this strategy, because the 401k is going to have a mandatory withholding of 20% tied to it. So what we want to do is we want to move money that's in a traditional IRA. So it has to be in an IRA to move it to the Roth, because we can select the withholdings to be zero. Because if you don't owe anything, why withhold anything? So that's number one. Number two, we need to make sure that the net worth clears basically the test. So, whenever people have 1.7 or more in IRA value, we for sure want to take advantage of this strategy and we can move money over. So let's just say, we're doing Roth conversions. That's fine. So the thing is, you want to start the Roth conversion timeline. So convert 10,000, 15,000, get it done as soon as possible so you can start the clock, even if you're paying taxes on it. But then from there, we want to do these mega tax-free conversions utilizing a specialized LLC structure. And then from there, continue the path on converting money incrementally each and every year. Now, the thing is, you can look at this another way. Let's say if you have $1 million to convert, you can convert to $1 million a year and pay an effective tax rate of 8%. Well, how is that possible? Well, we can use a specialized strategy for the $626,000, and then you can max out the 24% tax rate on the other 400,000 or sub 400,000. So when you look at the effective tax rate on converting the whole million, it's only 8%. That's not bad.
Yeah.
It's really, really attractive. I'm not saying that's what you should do, but we have to look at what's the best situation for you. Now, we have people that come in that are taking multi-six-figure number as an RMD. Now, you can't take the RMD money and place it directly into a Roth account at all, but you can do a conversion up and above. Now, for people that have a net worth of $5 million or more, we have the Big Brother Roth, which is not a Roth, but it's a different vehicle that allows us to put any types of dollars in it, and it stays tax neutral inside of there. And it stays tax neutral on your capital appreciation and on your any income that you're reporting as well, or any income that you're receiving. It's not being taxed using some special tax code. So from there, we just have to look at what's the best vehicle for you, but also what do you want to do with the money? If you're looking at buying equities, individual stocks, and maybe private placement, maybe you want to buy real estate, you have to use a Roth. If we can use the Roth alternative, then we'll do so. And so the key thing is we just got to make sure that we have all the boxes checked off, but we have to look at your situation. What do you want to do with the money? How much income you need per year? And look at what tailor-made program we can build for you, utilizing converting money from your IRA to your Roth, either tax efficiently or tax-free.